Meta stock, ticker symbol FB, formerly known as Facebook stock. They had the biggest drop in the market value back in February 2022. The stock fell roughly 26%. Since then, the stock is down another 9% because of everything that is happening in the market. But is Meta stock a buy right now? Let's find out. In this video, I'll show you everything you need to know about Meta stock. I will show you what Meta exactly does, and I will show you my fundamental analysis to see if Meta stock is a buy or not. I'm very excited to see what you guys think about Meta stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does Meta do? Meta, formerly known as Facebook, has changed a lot. Essentially, it means Facebook and social media will no longer be the company's main focus. Instead, it will pour its resources into constructing virtual reality products and setting up the metaverse. But social media will always be a part of Meta. To build a metaverse, they created three segments or categories. The first one is virtual reality, which lets you explore new worlds and shared experience. You will use Quest, which is the virtual reality product they created. You can use this thing to join friends wearing a headset to join concerts, movies, sport events, and many more immersive experiences. The second category is augmented reality. You can use these products to create augmented reality effects for Facebook and Instagram, and probably some other things in the future. The third category is smart glasses, wearable technology that will become gateways into the metaverse, allowing you to interact with the world around you. Smart glasses will allow you to record audio and video, and probably some other cool things in the future. Now it's time to check how big this metaverse industry can be. It's really hard to put a number on this one, but one number that keeps coming back is $800 billion industry by 2024. Which is based on the current valuation of 47 billion right now. But others already say it's a 500 billion industry already. If we check the revenue breakdown, we see that 97% of the total revenue is still coming from family of apps, which includes Facebook, Instagram, WhatsApp and other services. In essential, the main core business of before. The other 3% is coming from reality labs, which include the augmented reality and virtual reality products and services, the new focus of this company. This segment will need to grow from here. If we check the segment results, we see that the most of the revenue is coming from advertising, which is part of the family app revenue. The reality lab revenue is growing in Q4 2021 versus Q4 2020, but it's still making a loss. So I'm really interested in your opinion on this one, so please let me know your thoughts in the comments. In this graph we see the revenue by geolocation. We see that the revenue is going up real nice and steady, and that the US and Canada are representing the biggest revenue source. Followed by Europe, which is only the half of the revenue of US and Canada. In this graph we see the daily active people, or DAP. It's still growing over the past quarters. It's registered for Facebook, Instagram and WhatsApp. For Facebook, the daily active users is nearly flat in the most recent quarters. Compared to 2019, the US, Canada and Europe are nearly flat in growth, but Asia and the rest of the world is still growing real strong. Facebook average revenue per user is by far the biggest in the US and second spot is Europe. We saw that both regions are nearly flat in growth. Other regions are growing but have a lower average revenue per user. So, now that we know more about the company Meta, it's time to check the historical stock price performance and compare it to some competitors. First of all, it's a bit difficult to compare Meta to other companies because they are a so much bigger company versus the competitors, and because of the business they operate in. I choose to compare them to Tencent Holdings, Snap and of course the S&P 500. If we check the 5-year chart, we see that the S&P 500 did a better job in terms of stock price. Facebook got a return of 53% over the past 5 years. Tencent got a 56% return. Snap got a 66% return. While the S&P 500 did have a 87% return over the past 5 years. So in this case you were better off with owning the S&P 500 in the past 5 years. If we check the 1-year chart, we see that only the S&P 500 had a positive return of 6.5%, while all the others are down big time. Meta is down 31%, Tencent 41% and Snap is down 46%. There were different reasons why the stocks are down. In the case of Meta, it has to do with the performance and the outlook. If we check the 1-month chart, we see that Meta is up 14%, and compared to the others, it has made the most profit in stock price in the last month. The S&P 500 is up 4.5%, Tencent 3.5% and Snap is up 11%. Now that we know everything about the historical stock price performance, it's time to check the fundamentals of this company. Meta is a 605 billion market cap company with a PE ratio of just 16. I repeat, with a PE ratio of just 16. For a company this huge, this is a big thing, especially since the revenue is still growing in high amounts, which we will check in a minute. But it has to be said that this PE ratio is this low because of the drop in February. The operating margin is sitting at almost 40% and profit margin is sitting at 33%, which are both fine in my opinion. You want them to be above 10%. The margin on advertising is really high, which is a great thing, and they have enough room to grow their reality lab segment. Return on assets is sitting at 18% and return on equity is sitting at 31%. Both are fine in my opinion, and again you want them to be above 10%. The 12th trailing month revenue is sitting at almost $180 billion, and the quarterly revenue growth year over year is sitting at almost 20%. In this graph we see that the revenue is going up real nice and steady, and this comforts me a lot. The earnings per share are also going up really nice and steady, and this is boosted by the fact that Meta buys back shares. But more on that in a minute. When we check the balance sheet, we see that Facebook has a total cash of $48 billion and a total debt of $14 billion. And again, I'm going to repeat that for you. Total cash of $48 billion and debt of only $14 billion. They can pay down the debt very easily and still have a huge amount of cash left. For me, it's really important, so I really like this part of the balance sheet. If we check the cash flow statement, we see that operating cash flow is sitting at $57 billion and levered free cash flow is sitting at $28 billion. For me, it's really important that free cash flow is growing every year, which we see in this chart. The free cash flow of Meta took a big jump in 2020 and in 2021, but in the years before it went up also really nice and steady. So that comforts me a lot. Free cash flow is used to pay down debt, buy back shares, do acquisitions, pay dividends, and most importantly in the case of Meta, it also is used for research and development. So, Facebook has more than enough cash to develop the Meta universe. For now, Meta doesn't pay a dividend, but maybe they will in the future. So all the cash is invested directly into growing the business. If we check the shares outstanding, we see that Meta buys back shares in the past 5 years. For me, it's really important that a company this big buys back shares. And in the past 5 years, Meta bought back roughly 5% of the total amount of shares. To be honest, for a company with this amount of cash, I would love to see a bigger buyback program and at least see a 15% buyback rate over the past 5 years. But for now, it's okay. They buy back shares. To me, it's really important that they buy back shares because this will increase the EPS, which attracts other investors, of course. So, now that we know everything about the fundamentals of Meta, it's time to compare them to the fundamentals of some other competitors, in this case Tencent and Snap. Here we see that Meta has a real low PE ratio, which we discussed before. Tencent has a PE ratio of 30 and Snap has a PE ratio of 63. Both are trading for a premium compared to Facebook. If we check the price to free cash flow, we see that Facebook is trading for only a 10, which is again really low. You want this number to be below 20. Tencent is trading for a 15 price to free cash and Snap is trading at a 186, which is not a good thing. We see that revenue growth year over year is the highest for Meta with 37% compared to the 16% of Tencent and the 64% of Snap. All other metrics look fine to me. Meta is real nice and steady and in most cases beat the competitors. When we check the profitability, we see that Meta is again the winner. It has the highest margins, which comforts me a lot. Return on assets and return on equity are also the highest with Meta, so that's also a great thing. The balance sheet is also a winner for Meta. It has to be said that Tencent also has a lot of total cash, but the debt is really high compared to Meta. In general, I think the debt of Tencent is at a healthy level compared to the total cash. Same story for Snap. My final conclusion is that Meta is a really interesting company. I think they are undervalued based on the fundamentals we saw. The PE ratio is really low, the revenue is growing in high amounts every quarter, and Meta has enough cash to pay down the debt very easily, which is really awesome. On top of that, Meta buys back shares, but I would prefer to see a bigger buyback program for now. When we check the revenue breakdown, I think the shift to Reality Labs is real interesting. It needs time to grow from here, but I really believe in this part of the business. But the drop of February was justified in my opinion. The stock was overvalued back then and the outlook wasn't really good. Same story as with the lack of growth in users for the family of apps. For now, I think Meta is a buy based on what I see. I don't own any shares of Meta right now directly, but I do have multiple ETFs which include Meta stock. So technically I do own Meta. I think I will add shares of Meta stock to my portfolio in the coming months, because of the current valuation and because of the focus of Meta in the metaverse business, which is something I really believe in. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.